Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for what's today, Thursday, April 3rd, 2025. It is 9:45 a.m. Eastern Time. As I'm starting the video, going to get this one out to you quick. I just made an updated post under the one I gave. I reversed again. And I realize, sometimes what I do, tiger can't change its stripes. I'm an active trader. I tend to thrive in volatile markets like this, and I will reverse on a dime. Days like this, it's not unusual to see me go in and out of things like NQ, the Nasdaq 100 futures, and the VIX, which is a sister trade usually to that, long or short. Sometimes half dozen or more times a day, long, short, long, short. I don't plan to do that many, but I took the bounce. The bounce came quick, hit that, nailed the low in pre-market, got that chart out to you. Those charts, that update right away. But let me give you my thoughts, tell you where I'm going to go. And again, your head would spin. Everything would be dated by the time I get out. In a fast-moving market, I got to make the trades. Then I get the post. It takes a while to screenshot charts, mark things up. And again, trying to I've said this in the past. Trying to follow an active trader would be like you want to learn football and you're going to follow Tom Brady or Patrick Mahomes, whoever it is, on the field, in the game, in real time. And he says, do everything I do, follow me. No, that's not, I can sit and coach you, on the field, not during a game and practice and give you tips and tricks. But so as far as active trading goes, there's just it's impossible. So I flip, see things, looking at a gazillion charts at once. So let me just show you where we're at, what I think is going to happen from where we're at today. So we already had, now the bounce wasn't big, but fortunately I got that right at the lows in pre-market and screenshot that, got out to you. Oh, the pre-market trades are turned on. I can do the futures, but let me turn this on here. Paper trades, I'll turn that off. Edit chart properties, pre-post data, show the last two sessions. So this is, it doesn't look like a lot, but that's a healthy reversal. Anytime you can get, I don't have to tell you, if you trade futures, they're heavily leveraged as it is. And, 1%, that's a 1.3% reversal right off those lows. There's the pre-market lows, yesterday post-market. So it's near-term support. We could easily bounce some more. Let me turn that back off. All right, so let me tell you what I think real quick so I can get the video out to you guys. See this level right here, QQQ? I told you on that last post I got out to you this morning. We have really good support. 449.47 is good support, not only on QQQ, and let me just tell you where it is. So this is what I think is going to happen. I got up the bounce I was looking for. I think they'll go down. It's about 1.6%. And then that's where I will cover and reverse again. If we get there, and if we don't, I told you I'm a very flexible trader. If I think I need to get back long again, I will. SPY also, you can see the line. I have to sharpen my pencil here. Right there is where the line should be. About 539.74. And that's about another 1% drop. So my guess, it'll probably happen at some point today. It's just my guess, and again, I'm super flexible, and we'll pivot accordingly. But I'd like to see that last flush out today to get there. And here's the thing: why it would be atypical. It's not impossible, not extremely unusual, just a little atypical to see the indexes fall so close to a good support level like that and not hit it. It's almost like a magnet, when you put two magnets, if you're playing around as a kid with magnets, you have two and one in each hand, and you get the sides that attract, not the ones that push together. You get close enough, and they just snap together. You can't even hold them with all your might apart. You just hit that point and they snap. Markets are kind of like that. And then also I look at, as and this is what I've been doing all morning, it's all the market leading stocks. Look at Apple here. See this support level? That on a scale 1 to 10 is up there. You have three major, these were all-time highs. The stock was bouncing, broke out, didn't just meander around. It exploded when it broke above those levels. That tells me that was very technically significant. Then we had a textbook back test after a big rally. Again, this is how we swing trade. See these divergent highs, I go long, short. Divergent lows, I'm long. Divergent, and of course you can see the wedges that trigger the sell signals, the breakdowns. Divergent low at support, long. Divergent high. This is swing trading, and right now we have positive divergence, but we're a little shy of a very good support level that I would be surprised if it doesn't get hit. Now we could rally today. We could rally for a week or two. We could rally back to the 200s and then hit it. Again, that's anything's possible. I'm not here to tell you anything's possible. I only speak in probability. So the probability, I think, is decent, favorable. Favorable means better than 50%, not super high. Again, there's a lot that we could bounce. One of those limiting factors is how far we were down. Been trading for many years, many decades, and short of a full-blown crash, and like during the financial crisis, and we're not there right now. The market's credit risk, credit spreads aren't that high. We can drop more than 5%, but we were down about close to 5% on the Qs today when I covered. And so that's that kind of extreme there. And so it just tells me, the RR to stay short is not very good. And so, like I said, even now going long, you have about, on Apple, 2% downside. I just covered with those drops, 1% on SPY. And so we're very close to support. So, by reversing, covering shorts going long. Oh, not to mention, guys, positive divergence still on the daily charts. So this could be something else. We could be looking at the potential for a much bigger bounce. And remember, these are targets I laid out Apple long back, way back here. And this was that T4 zone was a target from a long time ago. That's still a target. Microsoft coming up. What I'm doing, guys, I'm showing you collectively that all these this is a big level. That's why I had a color coded yellow, 364. And you can see all these big stocks are just above those levels. So Nvidia coming up on that's really nice support down here if it can punch a little lower, but it's also just a hair above that 101.80 support right there as well. Positive divergence. I'm seeing that positive divergence across the board. I've talked to that quite often could get burned through in a bear market, but you have to respect it. And again, larger, longer term trends still bullish, although we are below the 200. So that's it. I just wanted to show you, and I think I did enough to cover in the market leaders. Here's Alphabet again, just a hair. So I think we'll get what I expected today, a little a rally due to the extreme sold, near-term oversold conditions. And then at some point, be it today or sometime this week, likely another thrust down. In other words, it would just be a better buy point if we can hit that level. We may not get there this week. I have very little, doubt that we'll get there in the coming weeks or months, but it would just be, again, a better buy point to launch a more sustainable rally than just this reflexive, I think, dip buyers stepping in right now. So that's kind of the way I'm leaning. There's Meta. Meta is at support. But remember, Meta also just gave up the ghost, the 200-day moving averages for the first time recently, and now it's below. But it's also at support. So, you're going to get the bull market. We're coming off the greatest bull market in history. I believe this will go down. I'm talking just the supersize, the Fed, everything they've done since the financial crisis, gunning the markets, and it's that old classical conditioning. That's Pavlov was the one attributed to classical conditioning, and that's he's the one famous for feeding the dogs, ringing a bell. Dogs associate the ringing the bell with food, so then he would realize he'd ring the bell and he wouldn't even put the food out, but then start salivating. That's classical conditioning. They expect food. Well, where I'm going is dip buyers are classically conditioned to buy the dip. They're getting beat up right now, and I talk about that's the beautiful nature of a bear market. That's why I love them. They at some point they start to realize where they keep buying the dip, it stops working. So we're getting close to that point of POR, point of recognition, where they realize, and we may be there, and that's when the bottom falls out of the market. And we could have started that next primary wave 3 down, or the next big wave down. So I'm just giving you my thoughts of real time. This can change. My positioning can change. There's Tesla right there, downtrend line resistance. Let me go to the closest thing to real-time updates for me. You've got to have your trading plan. You have your levels. You have your my thoughts from before. And I gave you some fresh, updated thoughts today. But if you want to get as close as you can to updates, come into the latest post. I will, post little kind of updates there that don't warrant a front page post, and so I closed out longs, and I may jump back in long again. So I took a nice bounce, that 1.+% bounce. And then reverse those back, and may do it again. And like I said, I wouldn't be surprised if 3, 4, 5 times or more today I'm long short the NQ, and yeah, someone gets it here. So all right, guys, and again, also define what you. Not everybody can be an active trader. You cannot be. You will fail. You will get eaten to pieces. I don't, want to say this, but that's if you're new to this, and you're sitting right now at work and you're trading on your phone trying to keep up with this market. I promise you're going to lose money, okay? And I say that with confidence. You can't actively trade. I've been doing this a long time, and it's not always easy. Sometimes it seems easy. Sometimes I'm in the groove. Sometimes I can't get in my own way. But I'm looking at 1, 2, 3, 4, 5. Well, if you count the giant monitor, which is really 4, 5, 6, 7 monitors, multiple streaming charts, watching lots of different things, and even then, you don't always get it right. You're not going to, successfully trade extremely fast moving volatile market like this on your phone or even on your computer at work or even at home if you don't have the experience to do so. So I always talk to the swing and trend traders. All we have after today right now, let me be very clear, is another big check mark for my longer term bearish case, another reason to be short, in swing and trend positions. No reason to cover QQQ shorts or VIX shorts right now. If you're a long-term trader, you might have just, like I said, I showed you this morning when I covered VIX, and the pre-market's gone now. The white candle, we were right at there, T1. T1, we already hit it once, and we reversed once. We were back here. I told you 2 weeks ago. This is where we'll scale back in. That was my scale back in zone. And so if you did it, you made anywhere from 30% in just a week or so to 22%, depending on where you scaled in on that zone. As I often say, resistance is resistance. Don't let's take it out. It is a resistance level I fully expect to take out. From the day I gave you these targets down here off the lows, I gave you 3 targets. But what we're doing is we keep hitting this level. The more you hit, knock, 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 the greater the odds are we're going to take it out sooner than later. And so, again, that was one. I just gamed the pullback. I told you, personally, I'll use futures, but I have, longer term accounts of this in as well where I don't use the futures. So, let's looking for a little, and again, that already happened, and now I think we're going to get one more thrust down, and then the VIXY will probably break out. I also gave you the chart of the VIX futures. They move fast too, but that was also at resistance. So you have those charts. I don't want to, now I'm being redundant. All right, so watch the levels, watch everything, and as I showed you this morning, let me just go to the 60-minute daily. We still have the potential positive divergence on the 60-minute charts now. The futures and the ETFs, we have positive divergence. We have it from this point, the bigger point that we had it in yesterday. It's still a divergent low. I'm drawing you the divergence lines. It's coming from back here. Plus this point right here, we have divergence. That's QQQ. And again, in a bear market, they'll just, especially when the big legs down come, they'll steamroll 60-minute divergences. That's where you really start focusing on the daily and weekly charts. Wait till you hit those good support levels / price targets. And then if you hit those targets, in other words, I'll be much more aggressively long and confident that if we hit those downside support levels that are a little bit lower and we still have this 60-minute and daily positive divergence, that's the time where I like to position for a swing trade, probably a multi-week double-digit bounce in the markets. And we could come from here. We don't have to hit those lower support levels. We have pretty strong divergences I'm showing you now on SPY and QQQ. This is SPY 60-minute chart. Positive divergence, positive divergence. The divergence is starting to steepening. That means it's getting stronger. The slope of the divergence lines are increasing. And then futures, and then I'll wrap up for you. That's a short-term chart. There's my, I gave you an hourly chart today on the front page. That's going to look the same. This is a 60-minute chart. So now, remember before we didn't have, now we do have on the futures as well, from here to here. Forget about this longer divergence. Right here to here, positive divergence. 60-minute chart of ES. Where is it? Where is it? Where is it? Because I may want to flip back and cover those shorts. Oh, let me get this out to you. Darn it. I'm looking. My charts move around on the these that I'm covering now, there's a whole flurry of them, and every day they seem to move their position down on my taskbar, so I have to find them. Positive divergence right there, you can see it, ES, divergent low. So, and again, I put a higher weighting just as you want to know, if you want to know why, okay, positive divergence, you game the bounce, got it, you know, why did you go back short? Like I said, it's due to that what I started the video with on the daily chart there. But I am not absolutely gung-ho sold that has to happen. I've seen plenty of reversals come kind of out of what you call no man's land. No man's land is what I define as when a security is smack between support, like there's a good support level, and the next support level, right? Just say right there, and no man's land's anywhere when you're in the middle. So that's kind of what we are on the daily chart of SPY and QQQ, the S&P 500. So these were my lines I've had for a while. This one's not as valid anymore, that 554.72. Why? Because we've cut through it a lot of times, but that one's still valid. In other words, that's my next support level. So that is it, guys. My current preferred scenario that can change on a dime. Jog down there. Game to bounce. It wasn't much, and again, I didn't when I fired that off to you this morning, I initially thought I was going to go for more on the bounce. Then I started looking at these daily charts. I started looking at the Mag 8, Mag 7, and again, it's just my instinct, years of experience. Like I said, all right, got the little, bounce was a little less than I thought, but so far popped the lows today, reversed the lows and sold the highs. I don't know if that's going to stick, and but that's the current plan. And again, if I make any changes, if it's big changes, I see something big I missed, or I've changed my mind, I will do a homepage post for you. If not, just check the latest post. I'll kind of give you some updates, any charts or anything else. That's it. All right, let me wrap it up here, get the video out to you guys, and obviously you're going to get more updates from me. I know most prefer static charts, meaning screenshots. You can act quicker. I'll do my best to get those out. But if it's a lot of things I need to convey to you, then it's more efficient to do it in a video format. You can always fast forward the videos. Hit the settings button on the bottom right, increase the playback speed, skip forward to see the charts you want to cover. That's another option. But let me wrap this up, get it out to you guys now. This has been Randy Finney with Right Side of the Chart. Have a good day, and be careful out there. If you're new to this, leverage can kill you. So don't, just keep it light, paper trade, or keep things light and learn, cut your teeth. Plenty of time to build your skills and, aggressively trade the next bull or bear trend that we get, or down the road.